Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Tom Keene with Paul Sweeney and Bloomberg's John Tucker. Where do you begin?
Let's begin with CFLT. That's the ticker, the company name. They're based in the Valley. Confluent. It's a data infrastructure company. They have highly sought after technology. Reuters says they're exploring a sale after they received acquisition interest. The company's working with an investment bank on the sale process. It's in the early stages. This was all instigated after private equity firms and other tech companies separately expressed acquisition interest. Now, Confluent became vulnerable to takeover approaches early in July. That's when the company reported actually losing business from a large customer. Bloomberg Intelligence writing this morning, Confluent's potential sale may not immediately offset growth headwinds from enterprise spending pullbacks, yet its strong cloud mix, high-value clients, and heavy marketing spending could attract buyers seeking synergies.
Synergies.
I love that word. With AI easing use of open-source tools, a larger partner could help refocus spending on product innovation. And if you understood any of that, please give us a call.
I was going to say, you're killing it today in the podcast.
Next, JEF, Jeffries Financial Group. They say they have $161 million of exposure to funds that held trade receivables and loans of the bankrupt auto parts supplier First Brands Group. The exposure mostly through its Point Bonita Capital. This is a division of its asset management, which manages trade finance assets on behalf of third-party and other investors. Leucadia has a $113 million equity stake in the fund. Jeffries also disclosed exposure to First Brands through Apex Credit Partners, in which it owns a 50% stake.
Thank you for doing this. This is like percolating.
Yeah.
Is how I would put it.
It's out there.
And
Public markets, private markets.
Marcus Ashworth in London would say there's more to this.
Okay.
Yeah, the scrutiny intensified in August, forcing First Brands to pause plans to refinance, $6 billion worth of debt. And finally, let's wrap up with, this is a drag on European markets today, but BMW issuing a profit warning. Among other things, they cite Chinese volume struggles. The shares tumbled yesterday, fell something like 7%. The German automaker said volumes in China below expectations. In addition to that, they said the U.S.-European Union tariff agreement, that actually has yet to materialize. So that's not finalized.
The tariffs thing that's one of the big stories, Paul, into Q4. We were all apoplectic about tariffs, 6 months ago?
Yeah, sure.
I mean, I don't hear anybody, groceries.
I know.
But is groceries because of tariffs?
I don't know. It's.
Do we all agree avocados are outrageously priced?
Everything's outrageously priced. I left the food town the other day with 2 small bags and a bill of $110. So
there you go.
I didn't get much. That doesn't
last
last
very
very
much.
long.
I look at it as per bag, and it's frightening.
So anyway, as far as the tariffs on European imports with respect to BMW, they're still at 27.5%.
Right.
They were supposed to go down to 15% for the automakers, but it hasn't happened yet.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.